Hi, Randy Baker here, your certified financial educator. Today we're going to pull the curtain off one of the greatest financial risks um, that you face. I did before I learned about this and took care of it. If you're over 50 years old, you need to pay attention. If you're under 50 years old, I suggest you save this video and watch it in a couple of years. Um, the reason we're going to discuss this is because odds are your financial advisor has not discussed it with you. And when they're calculating out your retirement and you're talking about your 401k, your IRA, or an investment account, everything revolves around the income when you retire and hoping to remain in your own home and maybe finally getting a chance to take those trips that you put off for years. Now it's time to go. Unfortunately, there's a 70% chance that this unfunded liability is going to affect those dreams in a very negative way. And we're talking about the expense of long term care. So, what is long term care? Um, Long term care, or the need for it, is classified when either A, you start suffering from a cognitive decline, or you have an inability to function. Two of the ADLs. So, what are ADLs? Those are activities of daily living. There's six of them. There's bathing, dressing, going to the bathroom, eating, transferring from your sofa to the chair or your chair to an automobile. Those things are going to require assistance. The question is, most importantly, if that day comes, who do you want to be the person to assist you? And too oftentimes it's a spouse, which puts a burden on the relationship and the lifestyle. And we all agree we do anything to take care of our spouses, but the reality is it does put a lot of stress in a relationship. Um, there's a 70% chance that you're going to be affected by it or your spouse is going to be affected by it. But only 8% of the people are financially prepared to deal with it. The reason that so few people are prepared is because when we were first approached, years ago about buying long-term care insurance when it was, sort of a fad or thing back then, um, there were some major problems with it. Number one, um, if the plans were set up so if you didn't use the benefit, you lost the money. The second thing is the premiums weren't fixed, so they could rise indiscriminately. And as you age, they would sometimes get to the point where you just couldn't afford it anymore. And one of the most inconvenient things about it was um, you had to pay the expenses first and then file a claim with whomever the carrier was. My experience with my own mother was that fees were capped on a daily basis. The monthly benefit wasn't nearly enough to cover the cost. Sometimes you submit the claim, they pay it right away. Sometimes you submit the claim, they pay half of it. There was always an issue. You didn't dot an I, you didn't cross a T. There was something wrong with it. It was just a constant struggle to get the benefits we were paid. And then at the end, whatever money was left over in the benefit, in my case, after my mom passed, that money was forfeited back to the company. So those were not good options. The second thing is you have three basic choices when it comes to long term care. You stay at home, which is obviously the most desired choice. We all want to stay in our home. Or you can transition into an assisted living or nursing home, or you could wind up in community care. What's not a realistic option, and many folks are mistaken about that, is Medicare and Medicaid really isn't an option when it comes to long term care. So let's look at the cost in today's dollars, which is really critically important. The average cost or median cost of a care provider now is around $19 to $21 an hour. So if you're in the unfortunate position where you need 24-hour care, the math says that's $288,000 per year, and the average duration is 4.5 years. So you're looking at about a $1.3 million obligation if you needed 24 care, or even if your parents needed 24 care. If you were fortunate enough to sleep for 12 hours a day and only need help for 12 hours a day, when you just divide that, and the math is easy because it's $144,000 or $650,000 a year. But you see where this is going. The nursing home is another option. Right now, nursing homes are around $92,000 a year. The average duration is 2.5 years. That's still $230,000, which I'm guessing isn't in your retirement fund. And that's if you're willing to share a room with someone else. You want your own private room where you can add another $100,000 to that. The good news is it's not too late. Um, it's not too late to protect yourself from that. You can actually turn this liability into an asset on your own personal balance sheet. You can acquire long-term care through a unique vehicle. It's a life policy that allows you to convert the death benefit into a living benefit, um, and use while you're still around. The money you put into it accrues interest, a pretty favorable rate. So you're guaranteed that the money is going to be returned to you 100% of the investment plus the interest gain on top of that. If you ever need to borrow against it, you can. The effective cost of borrowing from yourself is about 1 to 1.5%. It's a tool that wealthy people have used for many, many, many years in borrowing from yourself. The best thing about it is if you do require long-term care and you start triggering that benefit, you file one claim. The deposit comes into your bank account every month on the first day of the month. It's 100% tax-free, and it's also 100% unrestricted, meaning that you can use those benefits to pay your spouse, you can pay your child, you can pay your neighbor, you can pay a professional if you need one. And if you don't spend all the money of that month's allocation, then you keep the money. So it's a fixed amount month after month after month. So you're basically using this vehicle to turn a liability into an asset. And when you look at what the net cost, which means your contribution plus the interest plus the return, the net cost of the actual long-term care benefit is very negligible at the end of the day. So once again, something that your financial advisor may not have talked to you about. We're happy to share that information. If you're interested in it, just give us a call and say, send me the information on long-term care. It's 833-494-6669. And there's no obligation. We'll be happy to send it to you. Have a great day.